What's up, guys? I hope you're all doing good out there. The market has been really looking good lately. Today we'll be talking about Opyn or Squeeth, which is the token ticker for this project. So it's essentially Squared ETH, also known as Squeeth, and it's basically a perpetual options system that allows for unbounded upward leverage with no liquidations of your long holdings. So Opyn's research team actually designed Squeeth, or this Squared ETH, which is pretty much what we would call a novel financial derivative, and it is called also the first power perpetual, which actually provides traders with continuous exposure to Ethereum squared. So in this video we'll look at some of the DeFi strategies that Squeeth offers, including their crab strategy, which you can get into with USDC. We'll also look at the Zen Bull strategy as well, so please do watch the video till the end, especially if you're into options trading and options trading as far as derivatives go. And this is a really good perpetual options platform that you guys need to really get familiar with. So make sure you give us a like and a subscribe. Don't forget to check out the links in the description as well. And let's get started with Squeeth. So many of you might be wondering, so what is Opyn or Squeeth? So the best way to actually describe this is this platform, Opyn.co, is actually operated by Opyn Inc., which does run this interface, providing access to a decentralized protocol on the blockchain that allows you as a user to transact certain digital assets through power perpetuals. So Opyn is actually designed to provide open finance through DeFi strategies and perpetual options. So it's credited also with pioneering DeFi's first options protocol and the first perpetual option, Opyn Squeeth. So it's also favored for its strategies that are intended to help you as DeFi users put your digital assets to work by, for instance, simply depositing USDC or Ethereum on the platform and letting the smart contracts do the rest. So Squeeth, or Squared ETH, like I mentioned earlier, is described as a new financial derivative that was actually invented by this team, and Squeeth is deemed the first power perpetual, giving you as a trader exposure to Squared ETH. Mechanistically, Squeeth actually functions similar to what a perpetual swap does, tracking the index of ETH squared rather than Ethereum. So it is meant to provide global options like exposure. So that's pure convexity and pure gamma without the need for either strikes or expiries, effectively consolidating much of the options market liquidity into this single ERC20 token. So in short, Squeeth makes options perpetual, and it's very effective as a hedge for Uniswap liquidity providers, all ETH USD options, and anything that is a curved payoff. So to get started on Opyn, you just need to connect your Web3 wallet, e.g. MetaMask, and in order for you to then allow those smart contracts to interact with your wallet, you'll be required to give your authorization, and then you can log in and authorize your wallet, and then you can connect it. If it's MetaMask, for example, you can connect your account. So once your actual wallet is connected, you'll be able to utilize Opyn's strategies and also long and short Squeeth. So the crab strategy is a strategy which is considered Opyn's first automated strategy, which allows users to stack USDC when the price of ETH moves less than the market expects. Okay, so the strategy is named crab since crabs tend to move side to side, symbolizing that steady sideways movement that is reflected by the strategy staking USDC in stable market conditions. So in other words, the ideal market for executing such a strategy is when the price of ETH is particularly calm, or rather when the price of ETH fluctuates within a relatively stable range, especially with periods of low volatility. So users can actually deposit into a strategy as easy as that. So due to high price impact, for example, what I did is I deposited a small amount of USDC just to do an instant deposit instead of choosing that standard deposit option. Then a gas fee was charged for making that deposit, as you can see. So you can also check once your transaction has been processed that the deposit is successful. You will get a notification pop up on the screen. It's only there for a few seconds, but if you want, you can also check on Etherscan, confirm the deposit. So CRAB is actually a strategy that is built on top of an instrument called Squeeth. Squeeth is essentially this DeFi derivative that people can pay to buy. Buyers of Squeeth actually pay premiums which go to these crabbers. So in order to profit from stable ETH prices, Opyn's CRAB strategy does leverage market expectations. So the strategy indeed actually just aims to generate returns by betting against high volatility in the ETH market. In essence, profiting when the price of ETH moves less than expected. So on the back end, the strategy utilizes Squeeth to help users stake ETH or USDC. So more concisely, you can say that the CRAB strategy is effectively an automated vault strategy that makes possible for you as a user to benefit from going short Squeeth without actually taking a view on the price of ETH and whether that will move up or down. So the returns are actually made when Vault payers do short Squeeth and long ETH in order to create a position that has an appropriate delta of 0 to the price of ETH. And this can be seen as a classic short volatility strategy. So with that understanding, it's actually easy to see that the CRAB is similar to selling a continuous straddle with regular adjustments to actually ensure that it does remain profitable. So the strategy does rebalance and adjust 3 times a week to either realize a profit or a loss on ETH price movements as well. So a daily funding rate is typically paid by long Squeeth holders. This daily funding is paid to users deposited in the CRAB strategy, since CRAB does in fact hold a short Squeeth position. Okay, so the funding rate does represent the returns that are actually earned by depositing or into this CRAB strategy. Funding rates are payments that are actually made by long Squeeth holders based on the disparity between the mark price or the current trading price of ETH and the index price ETH squared. Okay, so you can check out, if you, for example, that the payoff profile will have an up down smile, which is like a hill that, that's where you actually make the most of your money when you're on top of that hill. And also funding earned, that's the premium paid by long Squeeth holders between rebalances, which is kind of in-kind funding as well. You got max gains, which is limited, max losses as well, and then liquidations. So in general, the strategies and except when there's a high ETH volatility in the market, when they have real big drawdowns, for example. So most often the strategies do earn returns if ETH is actually within the below bands at the next hedge as well. So yeah, this is quite interesting if you think about how Squeeth actually works compared to options. Squeeth does have a few advantages, like I said. No strikes, no expiries, no liquidation fragmentation, and no constant gamma, and no need to roll positions, which makes you obviously avoid risks and costs such as gas and spreads as well to market makers. And compared to perpetual swap options, Squeeth has advantages such as obviously no liquidations on the long side compared to a 2x leverage position. Squeeth will actually make more ETH when ETH goes up, or it'll make more when ETH actually goes up, and then it'll lose less when ETH goes down. So funding rates for Squeeth are expected to be high due to exposure to pure convexity. So the main difference between Squeeth and Perpetual protocols is that Squeeth is a leveraged position that is a fungible ERC20 token, enabling you to be trading it separately on Uniswap pools, for example, or you can order this collateral for loans. And that composability as well as one major advantage of the design of Squeeth. So you can also check out their guides just to understand how they implement Squeeth is quite interesting. But as far as the Zen Bull strategy, it's an automated strategy that allows users to stack ETH when the price of ETH actually moves less than the market expects. The strategy uses a combination of the crab strategy and leveraged long ETH positions to earn returns from stable, that means not volatile ETH prices. Okay, so Zen Bull is a way for you as a user to benefit from betting against ETH price swings without losing your ETH exposure. Zen Bull is actually ideal for low volatility markets where the price of ETH trends upwards rather. So on the back of on the back end, Zen Bull uses this crab strategy to use actually it for pretty much staking Ethereum. This is made possible because the people who buy Squeeth pay that premium, which goes to Opyn strategies. So Zen Bull is actually sort of ideal for low volatility markets where the price of ETH is trending upwards. This is obviously because it uses that crab strategy, which performs best when the price of ETH fluctuates within a relatively stable range. So there are different ways to Squeeth. You can long Squeeth. A long Squeeth is a leveraged position with unlimited ETH squared upside. It also has protected downside and no liquidation. So long Squeeth offers pure convexity, ETH squared payoff rather, giving it a more favorable payoff than the 2x leverage. Compared to the 2x leverage position, Squeeth will make more when ETH goes up and lose less when ETH goes down. But funding rates are expected to be high due to exposure to pure convexity. Long Squeeth holders also pay a funding rate for that position. As far as shorting Squeeth, short Squeeth is a short ETH squared position collateralized with Ethereum. So traders earn a funding rate for taking on this position, which is paid to long Squeeth holders. Short Squeeth positions can be liquidated. So users' exposure to the price of ETH actually depends on the amount of collateral that they've deposited, as well as if they own the collateral or have borrowed it with stable coins elsewhere. So you can easily track your positions on the positions tab of the dashboard as well. As far as risks and fees, you've got liquidation risks. So crab liquidation, if the crab strategy falls below the safe collateralization threshold of 150%, the strategy is at risk of liquidation. Rebalancing based on large ETH prices changes also helps prevent a liquidation from occurring. So to date, the vault has never been liquidated because both strategies use crab and they have this risk. So Zen Bull loans as well, these can be liquidated if ETH debt in the USD loan is actually below margins. So this is Opyn. I know this is probably a little bit more complex than the regular general crypto stuff, but this is what DeFi is really all about, and this is what excites me about bringing some of these traditional financial type of ideas and then implementing it on blockchains and really coming up with new ways to really have even products and services that you would not imagine would exist in the traditional world. And this is all because of DeFi. So if you want to learn more, make sure you go to decentralized.news. We have a resources page where you can find a whole lot of resources if you're interested in knowing the ins and outs of DeFi. If you want to know more about tokenization and real world assets and things like that, check out the links in the description to my books. Make sure you also check out our Telegram and our Discord server. Don't forget to check out the link to gains.network or G-Trade, which is the exchange that I really like at the moment. It's a decentralized, non-custodial platform. And it offers crypto stocks and Forex as well. So I think you guys should check it out if you're sort of worried about losing money to centralized platform. I hope everything is going well and we all make some big gains this bull run. Like, share, subscribe, turn on the notification bell. I will see you guys in the next video. Peace, love.